Hey there, aspiring real estate investors. Are you eager to discover the secret behind finding the perfect investment property? One that generates passive income whilst also growing in value? Well, you're in the right place. As an investor, the primary focus should be on the financial return when seeking a real estate investment property. While properties are often touted as excellent investments, it's crucial to understand that not all properties appreciate in value or generate income. In this video, we'll deep dive into the world of real estate investment and uncover essential strategies to help you make informed decisions. So if you're interested, hit that subscribe button and grab a cup of coffee and let's get started. Did you know mortgage repayments account for only 60 to 70% of the property's running costs? Most people only factor their minimum repayments when considering whether they will make a weekly return or positive cash flow. Although this does account for the majority of costs, the other remaining 30 to 40% of costs still make or break your ability to earn a positive net income. These costs comprise of expenses such as insurance, water rates, council rates, repairs and maintenance, smoke alarm testing, property management fees, and vacancies between tenants. Below is an example of typical weekly incomes and expenses you can expect from owning a 2-bedroom townhouse purchased at $425,000 in July 2019 and a 4-bedroom house purchased at $570,000 in August 2022. As you can see, both these properties' expenses are more than their income. You might also notice the repayment amounts are low compared to current interest rates. This is because at these times of purchase, interest rates were around 2 to 3%. This was historical low for interest rates. Therefore, it has been assumed that one would have fixed their rates at the time of purchase. However, in this example, these fixed loans would now likely be ending and switching to a higher variable rate as most people only fix less than 3 years at a time. To ensure a profitable investment, factor in these additional expenses and assess if the rental income covers all costs associated with property maintenance. Checklist question. Are you factoring in all the expenses associated with property ownership when calculating your expected return? Just because you can borrow up to $900,000, does this mean you should? Many investors make the mistake of borrowing the maximum amount they qualify for without considering potential future increases in interest rates and expenses. As we've established, over the last year, Australian homeowners have experienced a series of unexpected interest rate hikes. This was in response to high inflation caused by the money printing during the COVID pandemic. Those who maxed out their borrowing capacity at the record low interest rates prior to these hikes would now be starting to feel the burn. So, how much of a buffer do you need? Given the current interest rates and costs, aiming for a rental yield higher than 7% is advisable and realistic to break even in today's market. We can calculate rental yield using the following formula. Yield equals annual rent divided by purchase value. Here is an example of a 7% yielding property where rent is $600 per week and the purchase value is $450,000. And yes, you can find these properties in great areas. So make sure to assess your borrowing capacity wisely and calculate the minimum rental yield required to cover expenses, accounting for potential increases in interest rates and costs. Checklist question. Have you considered the impact of potential increases in the interest rate and ongoing expenses on your weekly return? Now, let's discuss the economic principles of supply and demand in the real estate market. Contrary to popular belief, not all properties constantly increase in value. Market conditions can shift, and sudden changes in supply or demand can impact property prices and rental demand. Let's take a look at some examples. Remember the sudden decrease in demand for student accommodation in 2020 to 2021 during the pandemic? It was caused by a significant decrease in net overseas migration as borders closed, resulting in a decline in rental prices and property values in units. This can be seen clearly here in inner West Sydney. Similarly, if an area's employment relies heavily on a single industry that shut down or relocates, the demand for properties in that area can plummet. For example, Dysart in Queensland saw the biggest falls in rent and sale prices post the mining boom in this area. Additionally, increases in supply of apartment blocks due to new infrastructure projects such as a metro line can lead to a surplus of units and reduced scarcity, affecting prices. Lastly, an area experiencing a declining population will face reduced demand for properties and rentals. These examples demonstrate why we need to analyze supply and demand dynamics to assess potential risks and opportunities in the market. Here is a full list of demand and supply factors that can influence property sales and rental values. For demand, we have cash rate, population growth, employment opportunities, consumer confidence, area appeal and amenities, and government policies. For supply, we have number of residential dwellings approved, commenced, and demolished, employed construction trade workers, and inflation of construction costs. These demand and supply factors are important considerations when analyzing the property market. By understanding how these factors interact in a specific area, investors can make informed decisions about property purchases, rental yields, and potential capital growth. Amazingly, all this information is free and can be retrieved from the Australian Bureau of Statistics website. What's more, they will break this data down for you on a national, state and territory, or smaller statistical area level. This allows you to make comparisons of different markets in Australia. Checklist question: how closely do you monitor the demand and supply factors in the property market that you're interested in? Are there any specific demand or supply factors that you need to consider when evaluating investment opportunities? How do you measure an area's performance? What data indicators do you need to look at? Market performance indicators provide valuable information on the interaction between demand and supply factors in any given area. Today, there is a lot of money being made in selling property data online. Although there are a lot of indicators that can be used, the main ones to consider when concerned with cash flow and growth prospects are the following: implied yield, median asking price, vacancy rate, days on market, and asking price changes over a 12-month and 3, 5, and 10-year period. By taking all these into consideration, you'll be able to get a whole picture of any given market's performance. How much will this cost you? Well, you can access this data for free for every Australian postcode through the SQM Research website. Compare these indicators between postcodes to identify areas with the strongest potential. Checklist question: do you have the necessary market performance data to assess the potential profitability of an investment property? Once you have identified areas with favorable demand and supply factors and promising market performance, it's time to delve into location specifics. When searching for a property in a favorable area, We need to select locations in proximity to shops, transportation, parks, healthcare services, education centres, and cafes. Properties located in close proximity to these amenities tend to command higher rents and sale prices. You'll also be able to locate these desirable and higher priced locations using the domain and realestate.com websites. Still unsure? Nothing beats a good business trip to the area and driving around to see which pockets you would want to live in. Whilst you're there, you'd also want to book in a few appointments with the local property managers. They will have in-depth knowledge of the area and able to give you insights into the desirability of different areas and their rental potential. Checklist question: have you considered the location appeal and sought local professional insights regarding your desirable area? How many times do you hear in the news about people's homes in Australia being destroyed by natural disasters? Australia is a massive place and has many different diverse and extreme climates. That is why a variety of environmental factors can pose a serious risk to your investment property. The risks that you need to assess when purchasing a property in Australia are termite infestations, bushfire-prone areas, cyclone risks, and flood zones. Luckily, most of this information can be accessed for free through council and state and territory websites. They are often presented in the form of interactive layered maps, which is helpful in identifying the risk levels of each of these factors in specific locations of your area. If your area is prone to environmental risks, then you can expect insurance costs for your building to be higher. Make sure to double check this with your desired insurance company. Checklist question: have you considered the potential environmental risks associated with different property options? What are the most important things to look for when inspecting a property and calculating an offer price? You generally only get 15 minutes to complete your property inspection, so it is important not to get distracted by shiny appliances and marble benchtops. Come prepared and focus on the visible repair costs, as you will need to factor these in to your offer price should you wish to proceed with the property. Coming with a checklist of items is highly recommended. It is also a good idea to bring a builder along with you, as they will be able to assist you in identifying areas needing immediate repair. Main areas you'll need to check during your inspection are appliances, running hot water, taps, windows and glass, gutters and roofs as best you can from the ground view, paint, lights and fans, fencing, flooring, doors, locks and handles, blinds, storage, and general signs of moisture or damage. Some other important things to consider as part of your inspection are: consider updated kitchens and bathrooms, as these tend to demand higher rental prices. Additionally, well-constructed brick homes generally have lower maintenance needs. And lastly, properties located on the higher side of the street helps with water runoff during heavy storms, reducing the risk of water damage to your property. Should you proceed with an offer following your inspection, it is highly recommended to complete a building and pest inspection. This will reveal any hidden issues that were not visible to you during a walkthrough inspection. Any issues identified can be later used to negotiate further on your initial offer. Make sure to opt for properties in desirable locations with durable construction materials and rent-ready features to minimize repair and maintenance costs and maximize rental yields. Checklist question. Have you considered all repair and maintenance costs associated with each of your property options? Who do you need on your team to build a successful real estate investment portfolio? As a real estate investor, it is important to have a team of professionals who can help you with everything from finding properties to managing tenants. This team can save you time and money, and it can help you avoid costly mistakes. Let's consider those who are essential. A solicitor can help you with all the legal aspects of buying and selling a property. They can review contracts, negotiate deals, and protect your interests. A mortgage broker can help you find the best financing for your investment property. They have access to a wide range of lenders and can help you get the best interest rates. A handyman can handle routine maintenance and repairs on your investment. This can save you time and money and can help you keep your property in good condition. Building a strong team of professionals is essential for success in real estate investing. By taking the time to find the right people, you can set yourself up for success. Checklist question. Have you considered the importance of having a reliable solicitor, mortgage broker, and handyman as part of your investment team? Are you actively seeking professionals who can provide these services and support your investment goals? Finding the perfect real estate investment property that offers both passive income and capital growth requires diligent research and careful consideration. Remember, investing in real estate is not a cheap endeavor, and treating it as a business venture is essential. With thorough due diligence and attention to detail, you can identify an investment property that aligns with your financial goals and sets you on the path to long-term success. Start your journey towards financial growth by implementing these strategies and embarking on a rewarding real estate investment venture. Remember, it's your business, so conduct thorough research, build a reliable team, and stay proactive in managing your investment property for optimal results.